What's going on, everybody? This is Jordan with Conquer Trading and Investing. You're looking at a chart here of the SPY. Now, one thing I want you to notice on this chart are there are a lot of gaps. There are a lot of gaps as this trades only during New York hours. I do not trade the SPY. I trade the S&P 500 through my FX broker. Let's take a look at what that looks like right now. And you can see that no longer do I have gaps. This trades 23 hours a day, giving me the perfect opportunity, no matter what is happening, to be able to go ahead, position myself, as well as exit anytime I need to. Now, there's a lot we're going to talk about today. We're going to talk about what's going on over here. We're going to talk about what is going to happen next week. We also have a lot of charts that we get to go over today, being it is the weekend, and there's a lot of interesting stuff for us to talk about, and we're going to get into all of it. Let's start right now by reviewing this week leading up into what is going to happen next week. Now, everyone that's been following the channel knows that what we're looking at over here is we were looking at this rising wedge pattern. Not only that, in a downtrend and at strong resistance. Okay, now what happened this week? We had a breakdown of the rising wedge over here. Came down, we took this trade. This trade was taken on the channel on Monday. We came and we took profits. Then over here was a good trade, about 53 points. After that, let me come down to a smaller time frame here just to give you a little bit better of a view. This is where profit was taken. You see this resistance over here? I locked in my profit right above it. It was hit overnight. And then I gave the guidance that if that stop is hit, and you come back and you retest that broken resistance as support, that's an opportunity to get long. We looked at this during New York. I gave then traders this trend line over here. I said, if price trades outside that trend line, it's time to take profits on that trade. We came into the resistance, were rejected, and went ahead and people then took profits. What was next, right? The next thing that happened later in the week, as we came up over here, we were watching this on the 5-minute time frame. Let me come back down and show you what took place so that if you're interested, you could see what happened and how to trade it. This is what we were looking at. This is where we started. We started live streaming about a half hour before the US equity markets opened. And I said, if we trade above this resistance, come back and test it. That's your opportunity to come over here and get long. Some traders got long. You had another trend line. You could go ahead, and once it was broken, that was a place to go ahead and protect profits. Since then, we've been neutral. Since then, I've been neutral. I want you to look at what's happening. I'm going to go a little bit slower now as we're getting into what is going on right now before us. Okay? Now, this is the area that I got neutral in. Not only that, I said this one thing. I said if we trade below, this was resistance, turn support. If we trade below that, 27.57, at that point, I am looking to sell. If we trade down there, I am looking to sell because that would mean that this breakout of this rising wedge, which has so far been rejected by resistance once, came down, established that support, has come up into resistance again. I'm going to talk about in a minute what happens from here, what could possibly happen. I'm not tied to either side. I'm not tied to the bull side. I'm not tied to the bear side. I could care less what all I want to do is trade is what happens. Okay? If we break down below this support established this week, at that point, I think we have some momentum here to the downside. We're going to come take a look at this area of support. If we blow through that, then this is going to open up to a nice trade. Now, I'm going to talk about the calendar next week. It's pretty important, and it's really important that you're aware of it. Before we do that, I also want to review on the upside. You could see we've tested late in the week into this resistance up here. You could see the resistance coming in. I had it marked at 28.52, and then we closed just under it on Friday. Okay? I said the reason I got neutral on Thursday was because look what's happened since. We're in a range. What's going on next week? Next week, the Federal Reserve is meeting. We're going to talk about that in just a moment. We also have on Friday non-farm payrolls. Is the market digesting what to do before those two events? Quite possibly. On the upside, we have two things to consider. We have this resistance again at 28.52. You could see it over here. You could then see it was support, which broke and then has reestablished itself as resistance. We closed above it. Okay, if we break above that, do you take that trade? Absolutely not. You have this trend line resistance coming into it, and then you have this big, strong resistance up at 28.92, okay? If we clear 28.92 to the upside, at that point, we are looking for a retest of that broken resistance, see if it's turned support, and if it does, at that point, my bias has turned pretty bullish. I'm looking to trade this towards the upside, and our first stop will be somewhere around 30.80. We will obviously be looking at that as it develops. So I'm just pointing out what could happen on the upside. It's a break above this strong resistance, and if it turns support, the downside, it's the support established this week, and that's over here. All right, so we're talking a range between 27.57 and 28.92. Within that range, there's plenty of opportunity. But I am neutral in this range. I am neutral. We're going to talk about that in a second as well. All right. So that's what we're looking at. We're going to come back to that, and we're going to see what exactly we're looking to key off of come Monday. First, I want to look at some charts with you. On Friday, we had released the durable goods report, and the inventory to sales ratio came in the highest in 11 years. What this means is that businesses are sitting on a ton of inventory, and they're not able to get rid of it. All right. So what does that mean for future manufacturing? Think about that. We have the global macro supplies index is showing, look at this, the lows we've seen since the financial crisis in 2008. Now keep in mind why we're seeing the economic surprise index trading at these really, really horrendous levels, which means that data is coming in way worse than expected. At the same time, we've seen stocks slowly drifting upwards. All right, look at the S&P, obviously drifting upwards, but at the same time, we are seeing COVID deaths increasing in the US. Here's a look at the FANG stocks, Facebook, Amazon, Netflix, Google. You could see that they were slightly up on the week, however, mostly range bound. But you could also notice off of the support, look down over here, that they have since resumed upwards offward. But look at over here at the resistance they're coming into. This is a look at bank stocks. You could see that they have been on a slow drift down all week, as have been 30-year Treasury yields. Looking over at the Bloomberg Dollar Index, you could see that the dollar continues to be very strong. And at the same time, gold is also completely bid, trading close to $1,700. Bitcoin also ending the week up higher. And crude oil, of course, had just a horrific week. Pressure on oil is expected through June. We're going to see what happens. This is what I want you to see over here. Because right now, we're going to look at the chart of the S&P 500, and we're going to see the battle going on. And right here, we have the bulls. Right here, we have the bears. And then we have the virus. All right, let's take a look. All right, let's take a look. The reason I wanted to end that with the bull and the bear is because that's exactly what's happening right now. Right now, we are almost in a stalemate. We are almost in a stalemate. Look at this. We had the huge sell-off. Then we've had the retrace back up into this big area of resistance. And right now, the battle lines are being drawn. Now you understand why I was neutral on Thursday and Friday, and a position on the sidelines is an important position. We made plenty of money early in the week that it was fine being on the sidelines, waiting for clarity. You're going to have a much higher probability of success if you wait for high probability setups instead of just being in the market to be in the market. That's how losers trade. Here, what we're waiting for right now as the battle lines have been drawn, and here are your battle lines. This is looking for a bull break. This is looking for a bear break. Right now, we are almost dead neutral in no man's land. I don't care which way we break. I am really not emotionally vested in the outcome that way. I only want to know what is happening so that I can position myself accordingly and take advantage. Now I want to drop down with you. I want to drop down to a smaller time frame. I'm going to drop down to the 2-hour time frame just so you can get a clearer look at the levels you need to watch out for. If on Monday we are able to trade below this resistance, but into this resistance and start resuming off, that is an opportunity to go ahead and take a short trade. Why? Because we do, like it or not, have a bearish bias here ever since the breakdown of the rising wedge pattern, right? Here was the breakdown that gave us the bearish bias. To flip that bias to bullish, we got to take out the resistance at 28.92. I'm going over these levels for you so that they're ingrained in your head. We have the bearish bias. At the same time, we are kind of neutral right now. So if we're rejected at this resistance over here with a bearish bias, that's an opportunity for us to get short, and then we'll look at managing that trade as it develops. Now, what else could happen? What happens if we break above this resistance here? Do we look to get long? There's not too much room between 28.52, 28.54, and 28.92. There's not too much room up there. I do not recommend taking a trade in the zone. The only thing that I will be looking to do myself will be if we trade up into this area of resistance, I will be watching the price to see if it's rejected at this resistance, because that is strong resistance. If you come back here, that's a place for me to look to step in. Here's a hint. In downtrends, sell off strong resistance, and in strong uptrends, buy off of strong support. Now, is this the uptrend? Has the uptrend started over here? We're going to look at a piece of information from Stanley Druckenmiller in just one moment that is going to give you, a possible signal that this could have been the bottom over here, and now we are in an uptrend. And if that's the case, and you're leaning off of supports, absolutely, you could do that, right? However, again, I'm waiting to get above the big resistance before I start buying off supports. All right, so I'm looking to sell if we're rejected by this resistance. I'm looking to sell if we're rejected by this resistance. And at the same time, I am waiting to see if we take out the 25.57 level, 27.55 level. If we do, if we come back, test that broken support, and it flips to resistance and we start resuming down, at that point, I'm entering over here, and this is the trade that I'm looking for. All right, let's see what Stanley Druckenmiller said. Now, before we do, this is a quote from Danielle DiMartino Booth. She's a former Fed governor. She said that this coming week, when the Fed meets on Wednesday, the Fed could surprise markets next week by strengthening its promise to keep policy accommodative over the foreseeable future, former officials told MNI. Now, what does that mean? If the Fed's going to be more accommodative? Obviously the Fed is looking to be more accommodative, at least verbally. If you have noticed, they have decreased their repo action of late. Now, come back to this quote with me. This is Stanley Druckenmiller. Stanley Druckenmiller is one of the greatest traders of all time. He had over a 30% return for 30 years in a row. He is the one whose trade idea it was to bet against the Bank of England. Even though George Soros, who was his boss at the time, is credited with it, it was Stanley Druckenmiller who came up with the trade idea. George Soros had him increase his position. Now, Stanley did say, he said, the next time the market's down, the economy is in bad shape, but the Fed goes crazy. The Fed has gone crazy. Remember, Druckenmiller, I missed the December 2018 and March 2020 bottoms because I was modeling fundamentals. I will not make that mistake again. What does that mean? That Stanley's looking at the markets and he's saying the fundamentals do not warrant do not warrant stocks trading at the levels they're trading. They should be trading much lower. But at the same time, you have to be aware of what the central banks are doing. He goes on to say earnings don't move the overall market. It's the Federal Reserve Board. Focus on the central banks and focus on the movement of liquidity. Most people in the market are looking for earnings and conventional measures. It's liquidity that moves markets. That's a little bit of the bull case. And most importantly, I want you to focus on this. Why do I want you to focus on this? I want you to focus on this. Look, I'm giving you the bull case over here. I'm quoting Druckenmiller. Because I'm giving you my plan going into next week, the levels I'm looking at to short. But at the same time, we are now getting close to the important strong resistance to this trend line I have over here, this yellow trend line, sloping down. If we break these two next week, I have no problem flipping to a bullish bias. All right? There is your game plan for the week ahead. I hope that you did benefit. I hope that you did learn something in this video. If you did, please go ahead and return that favor by smashing that like button. That's all I ask. Go ahead and hit that like button. Help the channel out. Help support me. Help me know that you appreciate the time spent doing this with you. I look forward to sharing more with you in the week ahead. Anyone who's available Monday morning, 9 o'clock a.m. Eastern time, I'll see you on the live stream. That's it for now, everyone. I'll talk to you later.